Once upon a time, there had been a lot of appealing arguments to buy Bitcoin. There was the argument that it's peer-to-peer cash. We can transfer value without having any bank in the middle. There was the argument of decentralized storage of value, that we can buy something and hold it ourselves without the government interfering. There was the argument of an asset that tends to appreciate much faster than the rest of any market. A better performer than technology stocks, a better performer than gold. Many of those arguments unfortunately do not hold true anymore. For example, is Bitcoin really still a decentralized store of value? Have a look at the number of addresses that hold at least one Bitcoin. Since the launch of the Bitcoin ETF at the beginning of 2024, this is going down. At one point, we had more than 1 million wallets with one Bitcoin. Now, nobody wants to hear about self-custody anymore. Now people just buy it through a brokerage account. They buy the IBIT ETF and the promise of a decentralized store of value. It's just that. It's a promise that has been broken. What about the idea of electronic cash, of being able to just send Bitcoin from one to another? Unfortunately, the technology that should enable more transfers is also not growing. There is the Bitcoin Lightning Network, which makes transactions faster and cheaper, but the capacity of that network has stopped growing at the beginning of 2023. The number of Lightning nodes has even peaked in 2022. So Bitcoin becomes less and less of a decentralized store of value. Bitcoin becomes less and less as a mode to transfer value independently. But maybe it's still a better store of value because of the scarcity, right? There's only 0.85% of new Bitcoin that gets mined every year. And potentially there's even more Bitcoin that gets lost every year. But really, Bitcoin is not an asset anymore that outperforms other risk-on assets. And that's already happening for the last 4.5 years. This is Bitcoin relative to a Nasdaq 100 ETF. Bitcoin divided by QQQ. And while in the early years, when there was still a lot of adoption of Bitcoin, we tended to see very nice outperformance. Since we hit the 62K mark in BTC, we do not have that outperformance anymore. Bitcoin underperformed technology stocks over the last 4.5 years by roughly 25%. The reason why I compare Bitcoin with the Nasdaq 100 is because it trades in a similar fashion. At the top, we've got the Bitcoin price. At the bottom, we've got the Nasdaq 100. They tend to go up and down and up at the same time. When we've got two assets that tend to go up and down at the same time, this tends to show that also the drivers of the price are similar. As in, maybe Bitcoin goes up, tech stocks go up because everybody wants to get risk on exposure because there's a lot of easy money floating around, and maybe they go down when people are scared potentially of a recession. The promise that Bitcoin would become a new gold, that it would become gold 2.0, has not been materialized. What we see at the bottom here, that's the gold price. And clearly the correlation between the gold price and Bitcoin is much weaker compared to the correlation of technology stocks versus Bitcoin. So really, Bitcoin trades like another risk-on asset. And that's why the relative performance to other risk-on assets matters. Now, what do we learn from this data? First of all, the nature of Bitcoin has completely changed, right? It's not anymore what it started out to be. But that doesn't necessarily mean that we shouldn't invest in it anymore. It simply means we should adjust our stance towards Bitcoin. We should potentially start timing the market. If an asset cannot constantly outperform anymore, but we've got all of that data around the asset, who's buying, who's selling, what's the reference price, etc. If we can potentially time the market, we can still outperform. If we just buy and hold Bitcoin versus tech stocks, we might not do much better. But if we have data that most people don't have, or at least most people don't use, we might potentially still make more money than most others. So here, for example, is something that's not available for technology stocks. How much net unrealized profit and loss does the average investor have? Historically, it was best to buy Bitcoin when there was net unrealized loss. So when the average investor actually had red numbers in their portfolio. It was a better time to sell when the average investor was in net unrealized profit, because then sometimes that profit gets taken. If you believe that long-term Bitcoin can outperform the US dollar because the US dollar gets printed by 6.8% every single year, while Bitcoin's expansion is much, much slower, if you believe that in terms of Bitcoin valuation, the price should long-term go up, then it doesn't necessarily make sense to sell at a loss. Then it probably makes sense to just wait it out. That's also what most people do with property, right? Very few people are willing to sell their house when they have to sell it for a lower price than they bought it for. But once the property price has doubled or tripled, there is potentially the chance to realize some of those gains. The same is true for Bitcoin. And so, interestingly enough, the volatility over time goes down. That's true for the upside. That's also true for the downside. So people tend to take profit earlier and they tend to buy the dips earlier. And there's a chance that maybe we won't see that much more unrealized loss in the future, that we should buy a bit earlier yet again. I don't really like doing it, but that's how the YouTube game works. That's how the algorithm works. Please give this video a like if what you've seen so far has been useful. Thank you very much. Again, the argument here is that buying and holding Bitcoin, just dollar cost averaging into Bitcoin, isn't necessarily as great of a strategy anymore than it used to be, simply because the outperformance isn't there anymore. And that's because many growth factors are gone. We don't have the Lightning Network story anymore. We don't have the decentralized store of value story anymore. We have to find ways to time the market to buy Bitcoin cheaper than the average investor. And things like the net unrealized profit and loss are quite useful tools. The average cost basis of the average Bitcoin investor is the realized price. It's currently at $56,261. When we fall below that average cost basis, it's at least historically a good time to buy. The problem is that the long-term holders are currently selling. They're already selling since Bitcoin hit 110K, and they are the major reason why we don't turn around and see a continuation of the rally. It's also the major reason why this rally wasn't as quick and as accelerated compared to prior rallies. And because the price appreciation of Bitcoin was so slow, it didn't create enough excitement. It didn't create enough media coverage. Thus, there was no new people entering the space. And that's the reason why we did not see altcoin season this time around. That's at least how I interpret the data. It probably makes sense to buy when there is very little short-term speculation. This here is the realized hodl ratio. When this is low, there's only long-term holders that are transacting Bitcoin. When this is very high, we see a lot of short-term holders trading Bitcoin. So it gives us a measure of how much excitement there is in the market. Currently, the excitement is fading down. It's declining for the last 12 months, but it's not yet at levels where it makes sense to set a contrarian bet to buy when everybody is giving up. Not everybody has given up yet. This time is really different. The nature of Bitcoin has changed, but also the way the price moves, what's driving the price action, has massively changed. What we see over here, that's the percent of Bitcoin's supply that's held by wallets that have interacted with Bitcoin within the last 3 months. So I'd consider this short to medium term traders, definitely not long-term holders. And this tended to peak in the past when the price of Bitcoin peaked as well, right? The price went up, new people entered the space, and so relatively speaking, the amount of Bitcoin that was held in a speculative fashion was very high. We also saw this picking up when Bitcoin rallied from 16K to 72K, another peak when Bitcoin hit 100K. But here is now the difference. Bitcoin has come down, yet we see the percent of Bitcoin held by short-term holders being rather high. Usually this peaks with positive price momentum, not with negative price momentum. The selling by the long-term holders is unprecedented. It's not something we have seen at any point in time during Bitcoin's history. And so really the question is, where will things turn around? Do we have to wait until we hit the realized price? Or do we potentially even have to wait until we hit the long-term holder realized price? This is also what happened prior in bear markets. We tended to turn around once we went below the long-term holder realized price. That's currently at 38K. There are many models with different price targets, and of course no model is perfect, but some of them are useful. It just gives us an idea of whether or not we should be over-allocated or under-allocated towards the asset. Again, I do believe it makes sense to time the market. Bitcoin is not anymore just a buy and hold asset. At least you want to outperform just buying and holding regular tech stock. Here is the CBBI. It combines various on-chain metrics, and so it's a good measure of figuring out what the average market cycle indicator is doing. And it tended to peak quite nicely, close to 100 at the top of a cycle peak as well. And it tended to bottom very close to zero when the bear market was over. Currently, we are unfortunately at 53. So only halfway through, there's potentially much more room to fall. Again, I do not have a crystal ball. I'm simply just showing an approach that worked very well in the past. And this is just the picture and how I interpret it. I am quite cautious right now as well. I do not have a lot of crypto exposure. I rather tend to short the market. I bet on falling prices, especially of the crappy altcoins. I have my doubts that PP Coin or Cult or PAL AI or the APU token or ThoughtChain Rune, etc., that they will make any kind of meaningful rally when there's really zero excitement, when nobody is entering the space. Who should buy this? Who's the marginal buyer? I know who the marginal seller is. It's the insiders, it's the team, it's the token inflation, but I don't know who's going to buy all that crap. And so this is how I make money here. I don't try to be a hero. I don't try to find the one winner out of so many losers. I'm simply just going with the general trend. And if this was indeed the beginning of a bear market and 125K in Bitcoin was the top, then there's very likely more room to fall from here. Now, there is a reason why the altcoins are performing so poorly, so consistently. It's not like everybody is taking profit. It's rather people like this, venture capitalists that invested in various crypto projects very early on. They got a lot of token allocation. That token allocation might unlock over time. And whenever tokens unlock, the VCs, the venture capitalists, they simply sell. It's a massive problem for the altcoin market. Every week, we see hundreds of millions of new tokens from existing projects hitting the market. It's currently at around 600 to 700 million. Some weeks, it rises above 1 billion. And the fundamental problem really is that there's not enough buyers for all of those new tokens. We can see this not just here on the macro, we can also see this in the micro. Here are a few examples. This is WorldCoin. WorldCoin is supported by Sam Altman, and there are token allocations for investors, token allocations for the development team. The number of tokens is going up constantly. And so WorldCoin relative to Bitcoin after the initial hype is just constantly going down. It's not a coincidence that WorldCoin crashed by 97%. But check this out. This is ZK Zinc. Also has an increasing token supply. Again, investors are getting their tokens unlocked. So does the team. And here's ZK Zinc's price relative to Bitcoin's. It has fallen from the top by more than 90%. We can go on and on. Here is Starknet with a lot of entities getting new tokens. Here is Starknet relative to Bitcoin. Here is Eigenlayer. Here is the eigen price relative to Bitcoin. And what we are looking at here is relative performance. So it's not just that the market in general is going down and Bitcoin has fallen by 30 or 40% and that also pushes down the altcoins. No, it's the altcoins performing much, much worse compared to Bitcoin. So when this relative valuation is going down and Bitcoin has fallen already by 30%, the altcoin has fallen by more than 30%. Again, this here is no coincidence. It's the insiders that are dumping on the average retail investor that doesn't really know what's going on. Now here's what I do in order to benefit from all of this. Let's go again to the Eigenlayer price development. Just as an example, right here we still have a lot of token inflation coming. So very likely this price will continue to fall further. So what I'm going to describe is very likely going to be a profitable trade in the next months. Instead of trying to buy the Eigen token, we can do the exact opposite. We can bet on the underperformance of the Eigen token. So we're just flipping this chart. Then it looks like this. Now what we see here in orange, that's the Bitcoin price over the time. So this kind of strategy does outperform just buying and holding Bitcoin by a lot. And again, it's not just random. It's not a coincidence. This is structural. It's because of the venture capitalists dumping on everybody all the time. And so we simply take advantage of that. Whenever a venture capitalist is selling their vested tokens, we are making money. This trade, for example, made roughly 1,300% in the last 12 months. So what do we need to do? We need to bet on rising prices of Bitcoin and falling prices of Eigen at the same time. So we're opening two positions, long BTC, short Eigen. And the reason why we want to open both of those positions is that we still have all of that correlation within crypto, right? So if Bitcoin was to suddenly rally by 20, 30, 40%, the Eigen price is likely also going to go up. It's simply just going to go up less. So when Bitcoin goes up 40%, then Eigen might go up by 20%. It still has the selling pressure by the team and by the venture capitalists that will, relatively speaking, depress the price. But the US dollar price itself might still go up when everything is going up. That's why we want to make the delta trade here. We go long Bitcoin, we go short Eigen. We don't just go short Eigen in itself. I'm following this kind of strategy already for 4 years. In the early days with borrowing and lending platforms, recently more with perpetual futures trades. But what we see over here, that's my alpha, my outperformance, my monthly outperformance versus Bitcoin in a given month. So some months I might still make losses because again, even that trade doesn't always go up. So if you shorted Eigen over here, you might have to wait for half a year to actually get in profit. So there are some negative months, but it's about the general trend. The dotted line here, that's my 12-month average. If we average out all of those dots, we come to a monthly outperformance versus just buying and holding Bitcoin of 1.9%. So on average, after fees, I make 1.9% more return than the average Bitcoin hodler. And that's with very conservative risk management. Here's my portfolio. This is not just trading. This is also dollar cost averaging into the trading account. And then I wanted to prove this directly in the market, not just showing here my results, but actually trading for the community as well. So in July of 2025, I opened up a community pool. The premium members, the annual premium members of Bitcoin Strategy, they were able to deposit into that pool. The capital pool had several $1 million under management. And while Bitcoin, during the time period, so we closed the pool just a few days ago, lost 24.9%, we made 17.3%. So over the last 5 months, we made more than just 1.9% alpha per month. And again, this is not just random, right? This is just working with the market structure, working with all of those cash outs that happen in the altcoin market all the time. Here are a few more details around that first copy trading pool. The average depositor in premium put in 17K. In the end, there was 20K in balance, so 2.7K in profit, 13.4% of average return. Now, why is this lower compared to what's shown over here in the chart? It's because most people did not deposit from day one. Many people waited to first see some positive performance and then afterwards deposited. That's why the performance from day one to the closure of the vault is 17.3, but the average member only made 13.4%. Then there is the 10% fee, so that comes from the platform. We use the hyper-liquid decentralized finance application. Still, when we annualize all of that, because this only ran for 5 months, this is 40.81% of return. Independent of the general market, right? We made money when Bitcoin went sideways. We made money when Bitcoin went down. We do this independent of where the general market is going. And again, the reason why this works is because we bet on rising prices of one asset and falling prices of the other asset. So when the general market is going up, then one of our positions goes up, the other position goes down. So this cancels out all the time. So the general market doesn't have any impact on this portfolio. The only thing that has an impact on the portfolio is how the altcoins do, relatively speaking, to our hedge. Now there is a new copy trading pool starting in January of 2026. So if you want to be part of that pool, there's a dedicated video and premium that also explains everything in detail. How to deposit over there, how much capital should be deposited, what are the risks, what are the fees, etc. If you want to get access to that particular video, you can also message me directly. I will then send this to you. So this is all part of the premium membership. If you just want to manually copy trade what I do, I announce this to every member, so you can simply sign up for the monthly membership. If you want to be part of the copy trading vault, then you have to subscribe for the annual membership. You do save $250 per year subscribing annually, and you will get access to the automated copy trading as well. Every trade that I make will automatically be mirrored. And while I cannot promise that we will reach again 40% annualized return, I will work very hard to make this project a success again. If it's your first time here, feel free to subscribe. I publish videos regularly. A like would be very much appreciated as well. It helps the channel grow. See you next time on YouTube, or see you in premium. Cheers.